I say Mark Zuckerberg is brilliant. So people say, Trap, he not brilliant. He's just following what Elon Musk did. That's cool. But when you do something in it, he's going to make more money off it than Elon made. That's brilliant. Watch this. Everybody said Facebook dead, Facebook dead, Facebook dead, Facebook dead, Facebook dead. I said Facebook can't be dead because they got zero debt. That's one. It can't be dead because they got zero debt, so there's nothing that's dragging them down. He got to adjust. There's a difference between a damaged stock and a damaged company. They definitely was a damaged stock, but it was a company in a blender. Cool. They lost revenue. They lost a lot of revenue. They lost 2 million users. So they minus 2 million users. They lost billions in revenue, and they lost 2 million users. 100% agree to that. But watch this. Ad revenue positive. So the ad revenue still had positive money on it. The ad revenue still brought in positive money. So Mark had to adjust. What did he do? First thing he did, cut metaverse spending. Second thing, added AI component. Third thing he did, fired 19,000 people. All of these things added what? Bottom line. All these things added bottom line. Fourth thing he did, pushed us to Reels. So he added that. He added AI component. He fired 19,000 people. He pushed us to Reels. What happened when he pushed us to Reels? Once Reels started generating cash flow, what did that do? Another ad component. Another ad component. Right? But watch this. Watch this. $14.99 blue check monthly. This the game changer. This the game changer. So when I say he was brilliant, people got in my chat and said, how is he brilliant, Trap? He copied that from Elon. Listen, brilliance don't always mean you the original. Tell me what idea you did that add billions to your bottom line. For the person who's saying he not brilliant, tell me what idea that you put in place that add billions to your bottom line, whether you got it from somebody or not. So if we go back to this, the billions that he lost, he gonna get that back. You know why I said this? Because I thought about this. He ain't gotta do nothing to make you pay for that. He ain't gotta create nothing. He ain't gotta create it. He ain't gotta do nothing. It ain't another system but giving you the blue dot. He already had that. That don't cost him nothing. And he get $14.99 a month annually for that. Low acquisition cost. Same thing Apple did with adding buy now and pay later. Low acquisition cost. He already don't have no debt. Watch this. The 2 billion users he lost, watch this. Because of TikTok situation, he already gained 1 million of those back anyway. He already gained 1 million of those back. Now we're going to say, Trap, they may be bots. Shit, they got bots everywhere. That's part of the culture now. So he's gained some of those back. He already doesn't have no debt. And now he's found a low-cost acquisition to generate billions more in revenue. How many people we know right now, from the time they launched it to now, we know got blue checks? I'm not mad at you getting it because I own Facebook stock. I want everybody to go spend their $14.99 because it's making me better. So all I'm saying is, when you argue with me about brilliance, I'm going to argue with you about bottom line. Watch this. My last thing for tonight. This will make it so dope. Twitter, 300 million users. Facebook, 2.9 billion. It's crazy when somebody make more money off you, of your idea. It's crazy when somebody make more money than you on your own idea. So I'm not mad at you saying he not brilliant. I'm just saying, what idea have you produced that add billions to your bottom line? 300 million users, 2.9 billion subscribers. There's 8 billion people in the world. It's safe to say he have over a quarter of the people in the world on his platform. The man took a punch from Apple and kept on going.
What's good, trappers, man? It's your boy, the Wall Street Trapper. Right now, I want to invite you to an amazing experience full of value. That is my community, Trappers Anonymous. It's 100% the greatest fundamental investing community on the market. Listen, your portfolio should be a masterpiece. And the only way we get you there is if we help you to learn how to invest with confidence. Now listen, I get it. Like, you don't know a lot about stocks, or maybe you've heard people say how much money they lost in stocks, but I can guarantee you, one, because they weren't in the community, and two, they lack the information. Our goal in Trappers Anonymous is to help you, really to hold your hand on the journey to becoming a confident investor, learning how to navigate through the different events that the stock market goes through, to take you from panic to encouragement. There's no better time than now. This is an opportunity only for those who are willing to be on the journey. So listen, man, click the link below. Come join me in Trappers Anonymous, man. I will see you in one of our many classes, whether it's Moat Monday, whether it's the 2-hour class we do on Sunday, or whether it's just a book club. Everything is geared toward making you a better investor so you can triple your net worth and turn your last name to an asset. It's your boy, Wall Street Trapper. See you in the trap.
All right, man, so as of right now, man, let's look at these big tech performers. Salesforce is up 16%, Nvidia is up 15%, Microsoft up 12%, Apple up 9%, Broadcom up 7%. What I will say is this, y'all. Write this down. This is a write it down I want y'all to write down. In a high interest rate environment, tech stocks win. Now, here's what we got to understand, y'all. The stock market don't go straight up. Stop looking for the market to go straight up. That don't happen. The market goes up, it goes down, it goes sideways, it goes turn, it goes up for days, down for days. Great companies that you want to own in time spans. Remember, episode 33, we talked about what? Short-term, medium-term, long-term investors, finding a catalyst to each one of those. All right, and so here he is. I'd like to show y'all. So XLK is up 6.7% from March 1st to March 27th. And that's beating out the equally weighted S&P 500. So if the S&P 500 equally weighted from March 1st to March 29th is only up 0.79%. So y'all wonder why I got that XLK stock, XLK option. Just know. Just know. Just know. Let's go a little further, y'all. All right. And so I wanted to show y'all this. So what we looked at was, this was the biggest week that we saw money going into tech since October. Clients bought tech in 7 sectors led by tech and healthcare. What are the 2 things I tell y'all you need to own? 3 of them is what? Tech, healthcare, aerospace, which is defense. You need to be there. Tech, healthcare, aerospace. You need to own at least one stock in each one of them. Technology has been buying every week but 1 year to date. Last year, 2022, 2023, 2024, 2025, 2026, 2027, 2028, 2029, 2030, 2031, 2032, 2033, 2034, 2035, 2036, 2037, 2038, 2039, 2040, 2041, 2042, 2043, 2044, 2045, 2046, 2047, 2048, 2049, 2050, 2051, 2052, 2053, 2054, 2055, 2056, 2057, 2058, 2059, 2060, 2061, 2062, 2063, 2064, 2065, 2066, 2067, 2068, 2069, 2070, 2071, 2072, 2073, 2074, 2075, 2076, 2077, 2078, 2079, 2080, 2081, 2082, 2083, 2084, 2085, 2086, 2087, 2088, 2089, 2090, 2091, 2092, 2093, 2094, 2095, 2096, 2097, 2098, 2099, 2000, 2001, 2002, 2003, 2004, 2005, 2006, 2007, 2008, 2009, 2010, 2011 Tech was off. So we rolled energy. This year, we riding tech. Until we see the shift. We looking at the S&P 500, tech sector, forward PE, trailing PE. October it was 18, October it was 20K, 20X. So that's the forward PE, trailing PE. That's price to earnings, meaning price to what they're earning. So this is how we tell this stuff is on sale or value. Now watch this. Today it went from 20 to 28 trailing PE, from 18 to 23 PE. Now here's what I want y'all to do to check my numbers and check my math. Here's what I want you to do. What I want you to do is, I want you to go look at what the PE ratio was of QQQ, XLK. Go look at what the PE ratio was in the height of the pandemic. At the height of the pandemic, I want you to go find out what the PE ratio was with the tech sector. Trap. Why am I going to do that? Because what you'll see is the tech sector right now is still cheaper than it was in the pandemic. There's so much game. There's so much game right here. There's so much game right here. The price to earnings tells us, the PE ratio tells us how much we're paying for $1 of the company's earnings, right? So if it's 28, that means we're paying $28. 23, so for the sector, trailing PE, forward PE, we're looking at that. Now, what I want you to understand is this. Yo, this is so good. This is so good, bro. Somebody online that charges y'all $19.97 for this, y'all. I promise you. I promise you. So right now, watch this. When I said I'm buying Facebook in the beginning of the year, buying more Facebook, when it was $100, this was a mark my word. This was a mark my word around week 16. I said, man, we buying more Facebook. It's $100. You know what people kept saying? Not that, cuz. This is the favorite thing they were saying. It's going to go lower. So that's people's favorite thing to say there. It's going to go lower. I bought Bitcoin at 11,000. I posted on Instagram. I said, yo, I bought some Bitcoin. I mean, I ain't crazy about crypto, but I know a deal. I'll buy Bitcoin and Ethereum. I'm going to buy it at 11,000. Guess what they said? Wait 3 more months. It's going to go lower. She at 26,000 right now. We got to stop with this it's going to go lower stuff, and we got to start finding value. Watch this, what I'm about to tell y'all. Value is the catalyst to the price you pay. That's a good one now. Value is the catalyst to the price that you are going to pay. What does that mean, Trap? Once I find the value, I now know what I'm willing to pay. God.